The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Today's guest and their company are not affiliated with or endorsed by LPL Financial.
So first off, thanks for doing this.
Absolutely. Thanks for having me.
All right. So for people who are watching this and they don't know much about you, could you fill us in and give us a little introduction?
Sure. My name's Katie Parnell. I'm a CPA. I got my CPA license in 2014. I primarily worked in industry, which is for other businesses and not public accounting firms. In 2020, I took the dive and started my own firm and registered as a CPA firm here in the state of Texas. And so about 6 years now, we've been helping small businesses with their accounting and tax needs. And here we are 6 years later. We just bought a building off of Buffalo Gap Road, and we're growing and expanding. So it's been a lot of fun.
It's exciting. What made you go ahead and get into accounting?
So in high school, I wanted to be a radiologist, so an X-ray technician in the medical field.
Very close field.
Yeah, very close. I mean, you can sit in a dark room, stare at a computer all day. And and I ended up going to business school instead because my grandparents owned a business. I went to work with them a lot. I helped them do some invoicing and stuff. I enjoyed it. And I also got married kind of young and went overseas to England. I tried to quit accounting in college, actually. After I did this project to interview a CPA, and he told me he pretty much lived on his couch during tax season. I was like, this is not for me. Right. But there's so much more to accounting than just working 80 hours a week during tax season. So my professor called me back when I dropped the class. He's like, you're my top student. Why are you doing this? I had a change of heart, went back a year later, and I love accounting. So it's one of those subjects that just came really easy to me and had a knack for it, I guess.
Do you think
addicted to it?
Do you think that early interview really shaped you going more towards industry versus a firm?
Oh, definitely.
Really?
Mm-hmm, for sure.
That was really a lucky experience that you had.
Yeah, for sure.
Yeah, awesome. So what is it about working with businesses that you like so much?
I like really understanding their operations. And then being able to advise them on various things such as creating efficiencies, generating revenues, trimming unnecessary costs, because not every business owner has that financial background or experience, but just being there to be able to give basic information to them and a good enough understanding to where they can look at a financial statement and at least kind of see where there could be some strengths and weaknesses. They may not fully understand it like we do as accountants, but I think that your finances are kind of the backbone of your business, and I think it's really important for business owners to have that understanding. And I come from a line of family members that own businesses too, so.
Gotcha, okay. When a business owner usually sits down with you for the first time, do you think there's anything that surprises them or catches them off guard?
Depends. So I was thinking about this earlier. If they're like a startup business or a really young business, sometimes I think the surprise is the pricing of the services that we may offer.
Okay.
Because they're not accustomed to outsourcing things. They may want to do it themselves, and they may not have the full understanding of the value that we add to that. The second surprise is usually if it's related to taxes.
Right.
Especially if they've never owned a business before, don't have experience with that, and they've been employed and they're used to those taxes being taken out of their paycheck. Once they start a business, once those conversations come up, it's kind of oh my gosh, I can't believe I have to pay all this in.
Right.
But it's mainly because you're having to physically now go do that versus an employer taking it from your paycheck per se. So,
starting in businesses, like you said, they don't really, business owners don't typically have that financial background.
Mm-hmm.
Where's kind of where you start with them with kind of looking at a profit and loss statement or looking at some of the numbers? Where do you usually start with them?
Usually we start, and this may sound cliche, but like at the top. Okay. If they already have a set of financials, maybe they've been doing it themselves or they're coming over from someone else, we usually start it at the revenue level, and we look at ways to dissect that to say, okay, your P&L has one account called sales, but you're in an industry that has 4 lines of revenue, generating items or whatever. And so we'll look at that and try to dissect it down, help them categorize things out so they can see, like for example, my firm, I will look at accounting service monthly income on one line item versus tax preparation services versus CFO consulting and advisory. So I'll break that down so I can really see where that revenue is coming from on a month-to-month basis, and it helps with budgeting. And then we'll go into the expenses. And it's really just about categorizing things that is mostly specific to your industry. So not everyone's set of financials are going to look exact, but the concept is all the same.
Gotcha.
And so we just kind of walk through that. And another good point is when you think of cost of goods sold, you think of businesses that are manufacturers or they have inventory on hand. I like to look at cost of goods sold or cost of services across the board. Okay. So if it's a cost of doing business, it's not just your general overhead and office expenses. We'll typically group those up so you can look at it overall with your gross profit. Okay. I do that too with my firm. So if it's software that's directly related to a client that the firm covers, it's a cost of service. If it's software that the firm needs to operate just as a firm, it's a operating expense. So, and then we'll walk through that. And then you have the balance sheet. Right. And that one's always really fun to go over. But
why is it fun?
I think there's always a misunderstanding of, you'll look at a profit and loss, you'll see your revenue and expenses, and then at the end of the day, you're at the bottom line, and then what we get asked a lot is, how come I show $100,000 in net income, but I don't have $100,000 in the bank account?
Gotcha.
So trying to teach the balance sheet, because things such as debt and assets run through that, depreciation, stuff like that, that's not going to necessarily run through your P&L, but it still affects your cash.
Gotcha.
So.
Yeah, that makes sense. Do you find that you have to work with owners a lot on trimming unnecessary costs or just things that are really dragging down their revenue or their profits?
Sometimes.
Really?
Mm-hmm. And a lot of times if they're a client who has regular meetings throughout the year, say a quarterly meeting, or at least they are proactive and they come in for their annual meeting in the fall, which we do around September, October timeframe. Depends on just kind of how the conversation goes, but I may question things. I'm not there to be an auditor, but we want to make sure that things are being categorized appropriately. And then if they are showing frustrations with, cash flow, if they're having cash flow issues and things like that, we'll help them trim unnecessary costs by asking tough questions like, is that necessary for business? Do you need to eat out every day? Are you running personal expenses through the business? Things like that could be overinflating certain expenses. So, and it is. I mean, we're there to have a hard conversation, which they understand that for the most part.
Yeah. Whenever I'm working with clients, it's very much I get their version of how they're seeing their expenses. Mm-hmm. I don't get to see the nitty gritty. I'm not looking at their actual statements like you are. So I'm always kind of curious. I'm just okay. I wonder how this is actually kind of working out, how this is playing out, and so just kind of wondering as you kind of see a lot of more nitty gritty details that I would imagine you're seeing a couple of things flagging. What do you think that is maybe a red flag for you're sitting down with a client for the first time or really looking at their books for the first time? What's a red flag that sticks out to you about their financials?
Red flag and pet peeve is commingling a lot of personal expenses with business.
Gotcha.
If we're maybe looking at a specific industry that we're familiar with and we see certain cost or expense categories that seem abnormally high, those could be red flags. And it's not necessarily a red flag that they're doing something wrong. They may just not be aware of what they're doing. And so it's about understanding what's happening first and then coaching them on what is appropriate and what's, legally tax deductible. So
any fun stories of someone trying to claim something as a very taxable or a tax deduction? Anything fun at least that they tried to?
I haven't had anything just off the wall, but like common stuff is like vehicle deductions. I think there's a huge misconception with that. Certain trips.
Yeah.
Well, we talked business in Mexico.
Well, sure. It's all we talked about. I
Right.
mean, it's really a board meeting.
Yeah.
Essentially, yeah.
Or handbags. I've seen handbags.
Oh, okay.
Well, those were
It's
client
marketing.
gifts
Yeah,
or
sure.
marketing. I logoed it.
Wow.
That's luxury.
Right. So since this is an area that you're probably always talking about taxes or being kind of prepared, this is something that whenever I'm seeing it with clients, that's all we're talking about. So I kind of want to get your perspective on a few of these things tax-wise. Are higher taxes always a bad thing?
No.
And why do you say that?
Well, everyone's in a unique situation. And it may feel bad if you are put in a situation where you're paying higher tax, but usually it's an indicator that you've had higher profits. You've had a better year. So that's a positive. I think that if you're being proactive through the year, you're consulting with either, your CPA, your investment advisor, you're strategically doing things that help you preserve cash and get those tax deductions and minimize that tax bill in your favor. That's the kind of the silver lining, I guess you could say. Now, if you have a high tax bill and you haven't done any planning throughout the year and you're just kind of winging it and then throwing stuff together and sending it to your tax preparer, could it be bad? Yeah, it could be bad because, in my mind, it's not smart. It's not savvy. So yeah.
I usually get a lot of clients who they had a really big tax year. They didn't have any preparation, and then suddenly they're like, how in the world do I never pay this bill again? And it's a pretty emotional meeting for some people. So I was kind of curious about, you get to see the first version of that, which is the, hey, I'm about to tell you this number.
Yes.
Do you think that kind of paying in more quarterly also helps break that down a little bit more so that they're not kind of getting one big thing at the end?
Yes, I think it will help spread that cash outflow throughout the year. Once you get, I guess, used to doing it, it's never fun. I don't like paying in my estimated taxes because, I'm putting away cash that we work really hard to earn and make, and then we have to send it off at the end of the day. But it is what it is. It's our legal system, so we have to pay the tax. But yes, definitely based off of like maybe your effective tax bracket, or if you are with a tax planner or advisor, not the same. The percentage isn't going to be the same for everyone, but at least try to set up maybe a separate bank account, and then each month transfer a percentage of those profits or revenues, however you have it structured, into that account, so those funds are building, and you know that they're there specifically to pay the tax.
Do you think it needs to be a full 30%? I mean, pretty much every single person just has that 30% stuck in their head of just like, oh, no, I need to always be putting every single sale I'm making. I'm putting 30%. I'm like, this cannot be the correct number for every single person. Certainly people, some maybe, yeah. But I feel like it's just this overgeneralized number that people just kind of like speak out, and then they're like, I don't know. What do you think about that? Or
I usually tell people, if I know their tax situation, I can advise more accurately.
Sure.
If I don't, I usually say start 10 to 15% at a minimum. Okay. Because if you're just starting out, you may not have a profitable year in the first place, but at least you're setting aside those funds for surprises. So you're not, no surprises, I guess I should say. But I think 30% is probably a little exaggerated unless you are in those high income tax brackets, obviously. But
any big tax misconceptions that you've run into with clients or people?
The biggest one, and like I tell clients too, it's the risk that you're willing to take if you get audited. And again, I'll say this, I'm not an auditor. I'm not going to tell you what you can and can't do. Right. There are certain things I won't put my name on. But the biggest misconception, I think, are vehicle deductions. Everybody that's a small business owner seems to want to write off their entire cost of their vehicle. Okay, but it's really based off of mileage. You still have to have the support. So if you are questioned or audited, you have to have the support to either, if you're claiming mileage for the mileage deduction, Or if you buy a $100,000 vehicle and you use it 50% for business, you have to have a log that shows that you're using that vehicle 50% of the time. And you're only allowed the deduction of 50% of the cost.
Right.
So,
yeah, I think that every car dealer anywhere is very appreciative of this misconception.
Oh,
It's
yeah.
like, oh, I can't wait to sell another Tahoe.
Yep.
Oh
yeah.
But I mean, it's definitely a wild one for sure.
Yeah.
But I agree on the, some people are going to run that line of I'm willing to get audited. I'm willing to try and get away with this for a certain amount of time. It's not my style, but you're certainly going to run into a few of those.
Sometimes the way I'll analyze it too is what kind of industry are they in? Are they actually driving every day? Are they in sales or something? It's more justifiable. And like I tell clients, if it's not documented, it didn't happen.
Right.
So just have the documentation if you get the letter from the IRS.
Gotcha.
So
what would, just to kind of like piggyback off of that, what would be some things that you wish that people knew more about, or maybe they had a better understanding of that? They're like, hey, I know that you're thinking this outside of the car thing.
Yeah.
What's an area that maybe you just kind of wish more people knew about it or was a little bit more prevalent?
I think probably like retirement accounts. We see a lot of small business owners, especially starting out or within the first few years, they're not really planning for the future. They're not investing. Even like I said, even if you can't invest a lot right now, start small. And I don't think they fully understand how that affects, the deductibility and lowering taxes. Right. And so I would say that's probably a pretty big area. We don't see enough people investing into their future. So
yeah, I would downright.
And how it plays into taxes, especially as a business owner.
Yeah, I deal with people who have been in business 5-10 years, and we start looking at some of those things now. It's like, what have you been doing?
Yeah.
And it's kind of those early years of running a business. I kind of think of like those are your practice years.
Oh yeah.
Like it's very much of like even if you're starting in the smallest version of it possible, that you are, hey, I need to be kind of, I'm trying to survive, but I need to have the mindset. I'm going to keep going at this. I need to take a chance on myself. And that is one area that I'm just always very shocked at is lacking. It's like, oh no, we should have been going on this for years now, but let's get caught up as much as we can. Yeah. Do you get any really cool tax TikToks sent your way ever? Or some
I saw this online.
Right.
I saw this on TikTok.
I've gotten a few, so I would imagine that you're just like, hey, I work in my TikTok time into my monthly schedule.
I'm like, I don't even have a TikTok account.
Right. So. No, I very purposely don't. That's funny.
Not too many.
Yeah.
Anymore, anyways.
Yeah, there you go. So, past taxes, other kind of murky areas for business owners are typically around profits, paying themselves, investing into their business. So, again, kind of moving into that direction.
Yeah.
How or when do you think that a business owner should start paying themselves more? Or even kind of how they should think about profiting for themselves and taking care of themselves?
I would say, again, if you're able to watch your cash flow and have a good understanding of the ins and outs of that, paying yourself, it's hard to determine in the beginning, obviously, but have you heard of Profit First? I'm not saying I'm a huge advocate for it. I've read the book, but I do like some of the concepts that it has, especially for business owners starting out, and then being able to store away pockets or allocate certain percentages of revenue, and then obviously as your business continues to grow, you're gonna intuitively feel that, and you're gonna financially see it as well, and then you can start making adjustments. It's so hard to say because everyone's so different, but just personally, 6 years ago, my goal was, I just love doing what I do. I might just be a one-man shop forever, and I will know what I need to live off of for my home and my family. And then my vision got bigger and I hired someone and I'm continuing to grow. And so again, personally, I do a budget every year. I keep my eyes on my budget every month. There's one Friday a month I block out half a day to do business planning. And it's just to make sure, are we on track where I'm wanting to take this, look at numbers. If we lose a client, I adjust things. If we gain clients, we adjust things. So
Awesome.
I think everyone, again, if you have an advisor, if not, just get into your QuickBooks, start running those numbers out and get a plan in place. Know your numbers.
No.
Yeah.
When do you think of business owners putting more money into their business or kind of investing back into their business?
Mm-hmm.
What are some, maybe, it doesn't have to necessarily be like a hard and fast rule, but just like what's something that you kind of coach people around with? Hey, you're putting too much of this into your business right now. Like there is a ceiling for what you're going to get back from this.
Yeah, I think sometimes it's more of stop taking so much out. But
Sure.
But I think it depends on what their goals are. So if in 5 years they want to buy property and expand, we would set goals to save towards that. So if we have a ballpark idea of what that looks like, what's a down payment going to be, either be able to put personal funds into the business to save for it or just don't take out as much until you can build that cash up to pursue those dreams and goals. But yeah.
Awesome. Okay. What are some smart early investments into someone's business?
Smart early investments?
Yeah, so like where should they start? Hey, this is really going to help you set yourself up for success later, and something to be thinking about early.
Like monetary investments?
Potentially, well, however you want to answer.
Well, the way I look at it is as a business owner, you're kind of the one who has to keep it going. And so the number one thing is don't jump into a business thinking, oh, this is going to be great. I get to be my own boss. Because it all falls on your shoulders at the end of the day. Unless you're able to build a big enough business with a team that can support you to where you can go on vacation every quarter, you're going to have to just, I guess, be aware that you're going to have to put a lot of sweat equity into the business if you want it to be, if you want it to transpire into something bigger than what you maybe initially thought. And so that in itself, I think, is a huge investment. It's not monetary, but it's giving back to the business and the people that are supporting the business with you, such as your team members and things like that. So hiring people, they're probably your number one asset and investment. Finding really good team members to help you achieve those visions, getting their buy-in is something that you probably should be thinking about since day one if you're wanting to be more than a one-man shop. So,
awesome. Any ego investments that you've seen people who suddenly, like, I don't know, early on there's kind of like this feeling that you have to do, that you have to like be, even though you're just starting out, you're like, I got a posture that I'm really successful. I mean, otherwise people won't trust me. What have been some of those ego investments that you've seen people make that they shouldn't have?
I mean, buying things that they can't afford, I guess, that the financials clearly don't support. So you don't necessarily need a big, shiny new office in the beginning. You don't need the best furniture. Like when I started, I bought everything on Amazon, and it's great. And I just got rid of it the other day, actually. I kept a few pieces. But also just personally vehicles, things like that, because they think they can deduct them. And if it's like buying a house more than you can afford. I think if you look at your operating cost, buy what will get you to where you need to be tomorrow. If you like luxury goods, those things will come if you continue just taking those steps to get there. But I would say, ego investments, flashy, shiny cars, office buildings that you may not be able to afford at the time. So
anything that you're stressing about isn't worth it.
No.
I mean, flat out, you don't appreciate it.
No.
Like it's really fun for a whole minute, and then that second that you wake up at 2 a.m., you're like, how am I going to make that payment this month? that is when it's a nightmare. And so, yeah, just absolutely to avoid. Okay, so you said that earlier that you just purchased a building that you guys are moving into. When do you think that leasing from somewhere makes sense, and when do you think it's a good jump to maybe own your own place?
Leasing is an expense. Owning something, it's an expense, but it's also an asset. So you're going to increase your net worth overall. Your balance sheet's going to look nicer because you can have that asset on there. Obviously, there may be a mortgage, so there's debt, but not all debt's bad debt. You can still deduct the interest portion of that, but at the end of the day, the note's paid off.
Yeah.
You own that asset, and if it's real estate, it typically appreciates in value. So when the day comes, you sell that, you'll be able to, benefit from some of those gains and pay tax on them too. But I think it's kind of like, what are your end goals? Like, are you wanting to grow and expand? Do you need a bigger space? Is there space to accommodate that by leasing? Do you want more of a permanent fixture in the community that you're in? We're a CPA firm. That's kind of one of our goals, is to be a very reputable firm here in the community. So I think having that building and the visibility is it's kind of nice to have. It shows the community like, hey, we're here, our door's open. You can come to our office. You can have a cup of coffee with us. It's just a more, I don't know how to explain it. It's just a different environment from the building that we were in. And I love the building that we were in. It was great, but I could only expand so much there.
Sure.
And office space is kind of limited, and I like having something that's a little more open floor plan so we can collaborate more together as a team and with our clients. So
nice.
I think
so this is more
I think
of a
it just kind of
purposeful
depends. Purposeful move. And I don't know, day one, I said one day I want to have my own building for my firm, somewhere that we can all go and enjoy and appreciate. And I set aside a percentage until I had a down payment 6 years later. So
that's really cool to see that vision kind of come true for you guys. Yeah,
it's been fun.
Yeah,
it's been real fun with contractors there right now.
Sure. Yeah, I would imagine a lot of it also, and I don't know if you're going to agree or not, but a lot of it has to do with, are you able to do it?
Yeah.
I mean, something may make sense for you to take on that very large mortgage,
Yep.
but commercial real estate's very expensive too. So it's very much of, sometimes businesses seem to get in that trap between, oh, well, if I had only bought it 5 years ago, which ultimately runs to, I wish I had the money 5 years ago to have bought that very much. Okay, so kind of continuing on, just the numbers are something that you can really see very clearly. Profits easy to kind of get to understand after a bit. There's a social element of business though that people kind of overlook. Do you think that the personal connection or the networking is something that's optional for business owners?
Not really. Or at least from my perspective, it's not. Unless you're just super sharp and you already understand business and you're jumping in and you know anything and everything about it, I don't think it's optional. I think it's good to make connections with people, whether they're on the same journey as you are, because you can talk to each other about that. What are your struggles? What can you learn from each other? My cousin and I, we both started our firms at the same time, and we talked almost daily.
Really?
And we learned a lot from each other, like what software is working? Why is this fee higher over here? What payment processor are you using? And so we were able to bounce ideas off of each other, and I think that's important for business owners because you're going to make mistakes. You're not going to know everything. And it's okay to make mistakes as long as you're learning from them and not continuing to make them over and over again. And get to know people that are in different industries, because you can support one another through referrals and just having different mindsets and ideas regarding things that you both may be facing as a business owner. But I might learn something new from a psychologist that runs her own practice,
right,
and she'll learn something different from me, and we can pull those together. And you never know where you may get a referral from or a really great client from. So,
Right. Yeah, the networking is always still something that I'm just like always trying to dial in as much as I can and try and grow as much as I can. And I've been just shocked at the people I've met and how much I've learned from all of them just kind of over the last few years. Like, wow, this is kind of amazing and very much is something that would be overlooked on my calendar or as I'm trying to build something and be like, oh, well, I probably don't need to go to that event. It's, I really need to get this thing done today. And it kind of flips sometimes, and we're like, oh no, that was a missed opportunity. That was something I could have learned, or could have been a good friend, or whatever it may have been in the future. How do you recommend? I don't want you to seem like I'm trying to say CPAs aren't super social, but how do you recommend that people build those connections when maybe they're a little bit more shy, or maybe they're a little bit harder for them to get over that hurdle of trying to be more social?
I think it's find one thing that maybe piques your interest that you can join, even if it's a Zoom call group for starting out. Because if you are shy and you're very introverted, that's a way for you to kind of get in and break the ice. You don't have to join every single club or networking opportunity. You don't have to go to every event. But I think maybe just start small and then do something that makes you feel a little uncomfortable, because usually when you do something that makes you feel uncomfortable, you grow from it. So start small, get involved with something.
Right.
Google your local chapter, whatever it is that you may have, affiliations with. So
my go-to is absolutely not to be social whatsoever. if I'm ever around a lot of people, my brain is like, you should run. This is a great time to run. There's an exit right there. It's for people like you to run. And it was kind of came down to, hey, I'm gonna find one person who looks like they are also uncomfortable, and I'm just gonna go talk with them, and that kind of built a little confidence, I think. I was going to ask you if you ever sought out mentors or people who were kind of just more successful than you at that point, or maybe just further in their journey, and maybe what that was like if you had.
So I go to a couple of conferences every year. The first one was pretty intimidating because I am more of an introvert. And a lot of it was like attending classes or joining certain groups of people that I either aspired to be similar to, who had a lot more experience. Ron Baker writes books. He is very invested in transforming the accounting industry. So the first QuickBooks conference I went to, I attended one of his lectures or seminars, and he talked a lot about changing the pricing structure in CPA firms. I guess our industry is very much like based on billing by the hour, billing by the time.
Yeah.
And he's like, package that stuff up, make it a monthly fee, know your value, know your worth. If you're providing that value and worth, your clients are going to see it. So I almost bought a CPA firm that was very much heavy in tax preparation, hourly billing. And when I started the firm, I took a lot of what he said, and that's how I pivoted and developed the firm. And I don't do hourly billing. We do package-based solutions for clients. My cousin was huge for me because she's a few years older and she worked in public accounting. She was actually a shareholder for a firm in Colorado. Okay. And I didn't have public accounting experience. And so I worked with a team of people in the same company for a few years at a time in the accounting department. So going public and providing those public services and meeting with different individuals and businesses all the time was a big shift. So she helped me, I guess, through a lot of that too, just kind of bouncing ideas back and forth with each other. So she was kind of like a mentor. But
that's huge. That's awesome. Good for you. So kind of going off on solo businesses and kind of getting things going, when do you think that a business owner should start to build a team rather than go it by themselves anymore?
You kind of know when you're so exhausted of doing everything yourself, but you're seeing the bank account rise a little bit. And that going back earlier when you say making investments into your business, hiring people, those are hard decisions because to hire someone, it's expensive. And that might mean, hey, you finally got to a point in your business to where you can either continue doing what you're doing, burning the midnight oil, but make more money, or get help. And sometimes that means you've got to take a pay cut yourself to balance that and shift it around. So I think it's more of like, have you done enough to create efficiencies, but you're still working to a point to where you don't have much balance.
Gotcha.
And it's going to ebb and flow too. So you might get to that point in 2 years, you hire your first employee. Another 2 years, you're back at it. And so, as a business owner, you don't.
Yeah.
But you kind of know.
Yeah, when you're tired.
Yes,
That's exactly
when you're tired.
it. When you're like, please, someone else open. Please, someone else do this for me. Yeah. How do you think about building a team that you're appreciative of, but isn't just another hassle that you're having to deal with in your business?
We kind of have a 3-step interview process for the firm now. A lot of it for me is if I'm hiring an accountant, I usually know based off their resume or work experience if they had the experience that we're going to require to do the job.
Sure.
Obviously, I'm going to vet some of that, but our process is more about getting to know who they are and if they're a good fit for the culture that I'm building at the firm. Will they be a good fit to communicate with our clients? It's really just about being professional and friendly and having a good eye for detail, not letting things fall through the crack, have good work ethic, because I want to have fun, and I like to go to conferences with my team, and we hold annual workshops. And so I think a lot of it is just finding the right person is difficult for your team, but I think if you get to know them, if you can sit down and really formulate questions that you can ask of them to see if they're going to be a good fit overall, because you can teach all day long how to do something. You can teach skills.
Right.
You can't teach work ethic. You can't teach personality, morals, and values. So,
Gotcha.
yep.
Awesome. What is success looking like for you now versus 5 years ago or 6 years ago?
So different. I think I said earlier, 6 years ago, it was just more of, I enjoy what I do. I might be a one-man shop forever. Now I think it's more about, I really want to provide for my team. I want the firm to be able to provide for the team. And I don't necessarily want to say success is $1 million in revenue. Success is being the biggest firm in Abilene. I think success is more about, is the firm able to take care of the people that's taking care of it? And then getting input and feedback from them on where they ultimately want to go and grow. And so I can at least nurture that and cultivate that for them. So that's really important to me.
Awesome. What is something that you're excited about right now in your business?
I'm really excited about this year because we're in a new building. We've taken on some really great new clients here recently, and we're about to kick off a really big project for a client that's been in the works for a while. Awesome. So one thing I'm excited about, which is monetary, I'm not going to lie. When I started the business, after about the first year, I said 2025, I want to have $500,000 in revenue. Okay. I fell about 20,000 short of that, and so this year I'm like, maybe we should go much higher.
That's awesome.
But so I mean, again, I'm not all about the money, but numbers do speak a language to me, and so being able to see that also means I can take care of the other visions and goals that I have. So
absolutely. Yeah. What is something that you're working on? It can be personal, it can be in business. What's something that you're working on right now? Or focused on?
I would say I'm focused a lot on the business right now just because we have gone through a lot of change. I have a new staff member who's focused on tax preparation, and she's a CPA. She's remote, so Working remote has its challenges, but she's great. She's super sharp. So training her, I think I'm just kind of working on reshuffling things because I'm kind of in that phase. Is it time to hire somebody?
Right.
So because I'm again, I don't have a whole lot of balance right now, and that's okay. But that's one of the like a strategic thing that I'm moving towards right now is reshuffling the team, looking to add another team member. We're needing a staff accountant. So
Very nice.
yeah,
Very cool. All right. Well, thanks for doing this.
absolutely. Thank you.
Where can people find out more about you, get in touch with you, anything?
Our website's keycitycpa.com.
Okay.
That has all of our information on it there, and or you can Google it. We'll come up. But yeah,
Okay.
we're off the Buffalo Gap Road now in South 32nd. So.
Awesome. All right. Well, thank you.
All right. Well,
Appreciate it.
thank you. I appreciate it.